Hi, Shae Russell here, editor of the Daily Reckoning Australia, and I thought we'd take a quick look at Macquarie Bank. Now, while the Royal Banking Commission's been ongoing, we pretty much haven't heard a peep from Macquarie Bank, which is often called the fifth pillar of the Australian banking system. Now, the reason why we haven't heard anything about Macquarie Bank is because they haven't been called up to give evidence, as it was felt that it was too short a notice to get everything together. This means the big four banks in Australia have taken the main brunt of the banking inquiry. Does that mean Macquarie Bank is squeaky clean? Probably not. It's a bank after all. However, what this does mean is Macquarie Bank has been able to go about business without being as heavily scrutinised as the other four banks are. Just to sort of prove this point, all four banks, or the big four banks I should say, are down around 16, or their share prices are down 16% since April last year. Whereas in contrast, Macquarie Bank is up 31% in the same time frame. Now, part of the reason for this is Australian banks are heavily reliant on the mortgages in Australia to grow and stay profitable, whereas Macquarie Bank isn't. They're what's called an annuity style business, so they receive a lot of their income from funds management, asset financing, and retail banking and finance in Australia only accounts for about 11% of their business. So Macquarie Bank have a very heavy offshore exposure. So it is good in one way that they don't have this major focus on mortgages in Australia to grow their business. The downside of that is that it means they are heavily exposed to global events overseas. Now, a couple of things that are going in Macquarie's favour at the moment is the weak Aussie dollar. As the Aussie dollar weakens a little bit, that's going to boost profits for Macquarie. So too is Trump's tax cuts. So it's been estimated that Trump's recent tax cuts in the US will translate to about an extra 5% bump in earnings growth later in the year. So these are all good things. But as I said before, Macquarie is heavily exposed to global events because so many of its interests are offshore. What that does mean is, unlike the Aussie banks, which are quite sensitive to international bank rate movements, Macquarie is very sensitive to business downturns. So if we start seeing consumption or growth in the US slow, that is very much going to affect the share price for Macquarie. We're not seeing those signs come through yet, and even though Macquarie is trading at an all-time high, there is a chance it could go higher. However, just remember, if you are holding shares of Macquarie Bank, that they are very sensitive to international events. That's all from me this week. I'll see you later.